What happens when the world's largest economy wants a quick trade deal, but the world's fastest-growing major economy says no? That's exactly what's happening between India and the United States. Despite months of negotiations and expectations that an interim agreement was almost ready, India has decided not to rush into a trade deal with Washington. So why did New Delhi step back? Has India's bargaining position really become stronger? And what does this mean for both countries and for global trade? Let's take a closer look. Trade negotiations between India and the United States have been underway for several months. Many observers expected both sides to announce an interim agreement during the recent visit of US Trade Representative Jamieson Greer to New Delhi. But that didn't happen. Instead, both countries walked away without a deal. According to reports, the two sides remained divided over several key issues, and India chose not to accept an agreement that did not meet its core demands. Rather than signing a quick agreement, India decided to continue negotiating. According to officials familiar with the negotiations, India's position is straightforward. The government believes that a bad deal is worse than no deal at all. New Delhi was unwilling to compromise on several issues that it considers non-negotiable. One of the biggest concerns was tariffs. India reportedly wanted preferential tariff treatment compared to competing exporters, particularly China. It also wanted greater certainty that the United States would not introduce new tariffs shortly after signing a trade agreement. Another major issue was agriculture. Agriculture remains politically and economically sensitive in India. Millions of livelihoods depend on it. Because of that, Indian negotiators were unwilling to make concessions that could negatively affect domestic farmers. Officials also emphasized that India's red lines, particularly on agriculture, would not be crossed simply to conclude a quick agreement. From Washington's perspective, the United States was hoping to secure trade concessions before President Trump's proposed tariff measures are expected to take effect later this month. Currently, most Indian exports entering the US face a tariff of around 10%. However, the Trump administration is considering additional tariff measures through investigations into industrial capacity. Separately, Washington has also proposed tariffs of up to 12.5% on imports from several countries, including India, related to allegations involving goods produced with forced labor. India has rejected those allegations. According to sources familiar with the US negotiations, Washington believes India should first make its own concessions before receiving the preferential treatment it is seeking. At the same time, the White House has stated that discussions remain productive and that both sides continue working toward what it describes as a historic agreement. So why isn't India rushing? Analysts say several economic developments have strengthened India's negotiating position. First, India's exports have remained resilient. During the April to June quarter, goods exports increased by roughly 15%, compared with the same period last year. This growth came despite regional disruptions caused by tensions involving Iran. Petroleum exports remained strong. Exports to Gulf countries recovered to pre-conflict levels. And shipments to the United States also continued to rise. In other words, India's export performance has remained relatively healthy. India has also been expanding its trade relationships beyond the United States. Its free trade agreement with the United Kingdom is expected to come into force soon. At the same time, trade negotiations with the European Union are progressing and could conclude next year. This diversification gives India additional options. Instead of depending heavily on one market, India is gradually building multiple economic partnerships. According to Wendy Cutler of the Asia Society Policy Institute, India now has greater leverage because of its economic strength, diversified trade strategy, and growing strategic importance in global affairs. India's domestic economic outlook has also improved. Following the temporary easing of tensions between the United States and Iran, concerns over oil prices have reduced. That has improved India's overall economic outlook. Goldman Sachs recently raised India's economic growth forecast for 2026 to 6.8%. At the same time, it lowered projections for inflation and the country's current account deficit. Taken together, these developments suggest India has greater economic flexibility while negotiating international trade agreements. There is another important calculation. Some analysts believe New Delhi expects at least some of the proposed US trade measures to face legal and political challenges within the United States itself. For example, a coalition of 22 Democratic state attorneys general has already challenged certain proposed tariffs related to forced labor investigations. If those legal challenges succeed, the trade landscape could change again. That gives India another reason to avoid making rushed commitments. Domestic politics also play a role. Prime Minister Narendra Modi's recent electoral victories have strengthened the government's political position. Meanwhile, leaders within the BJP have consistently argued that any future trade agreement must protect Indian farmers and small businesses. Former trade negotiator Ajay Srivastav summarized the situation by saying that delaying or even walking away from a rushed agreement may ultimately be wiser than accepting obligations whose long-term costs outweigh any short-term tariff benefits. Despite the disagreements, negotiations have not collapsed. Both governments continue to engage. Officials from both sides still expect discussions to continue. However, most analysts believe a breakthrough is unlikely in the immediate future. Instead, both countries appear willing to wait until conditions become more favorable. For India, the priority is securing terms that support long-term economic interests. For the United States, the focus remains on achieving trade outcomes consistent with its broader economic strategy. Whether those objectives can be aligned remains to be seen. The current negotiations highlight an important reality about international trade. Trade agreements are rarely just about tariffs. They are also about strategy, economic resilience, domestic politics, and long-term national interests. India's decision not to rush into an agreement does not necessarily mean talks have failed. Likewise, the United States continues to signal that it wants a deal. For now, both sides remain at the negotiating table. The question is no longer whether a trade agreement will happen, but when both countries believe the terms are right. Stay tuned and subscribe to Indic News Network for more updates on geopolitics, global trade, strategic affairs, and the events shaping our world.